All right, diving into U.S. cryptocurrency regulation today, you sent over a bunch of legal and financial documents.
Yeah.
So I'm guessing you want to understand how crypto is being shaped by, the powers that be.
It's a jungle out there.
Sure.
Smart to try to make sense of it all, especially with how much the regulations have changed, even just like recently.
Yeah, for sure.
We're talking about a whole new type of asset, right?
Yeah.
One that challenges some pretty fundamental ideas about money and control.
Yeah, and power, too.
So naturally, it's making waves.
Yeah, big time. One thing that really stood out to me in these documents was how the IRS classifies cryptocurrency. They see it as property, not currency, for tax purposes. Seems straightforward at first, but I'm curious, what does that actually mean for someone who's, say, actively trading crypto?
It's a big one. A lot of people get tripped up on this.
Yeah.
Basically, if crypto is property, it means every single transaction is potentially taxable. Buying, selling, even using it to, buy a pizza. It's a taxable event. Imagine the capital gains calculations every time you spend Bitcoin.
Oh, man.
The record keeping alone would be like a full-time job.
Right. A huge headache for individuals and businesses.
Yeah, absolutely.
Sounds like you really need to be on top of your record keeping if you're serious about crypto.
Well, for sure. And it's not just about keeping track of everything. It's about knowing which accounting method works best for your situation.
Okay.
Like FIFO, first in, first out, or LIFO, last in, first out.
Right.
Can have a huge impact on how much you owe in taxes.
Gotcha.
Definitely worth talking to a tax pro who specializes in this stuff.
Solid advice. Okay, so before we dive into the taxes, let's zoom out a bit.
Okay.
You mentioned crypto challenging some fundamental ideas about money and control.
Yeah.
What did you mean by that?
Well, think about it. We're used to banks and governments controlling our money, right? Issuing it, regulating it.
Right. Yeah.
Cryptocurrency, it's decentralized. It relies on cryptography and this thing called blockchain technology.
Right.
It cuts out the middleman. Peer-to-peer transactions.
Yeah.
No central authority needed.
Wow.
It's a pretty big shift.
That is radical. No wonder regulators are scrambling.
Yeah.
Speaking of regulators, who are the big players in the U.S. trying to tame this crypto Wild West?
Well, there are a few key agencies. They have overlapping jurisdictions. So as you can imagine,
I bet.
It gets complicated. We've got the SEC, the Securities and Exchange Commission.
Oh, yeah, the SEC, right.
Investor protection, fair markets, that's their thing. When it comes to crypto, they're trying to figure out, is a digital asset a security? Because that changes everything.
You're right, and they use that, the Howey test to figure that out?
Yeah, the Howey test.
Right.
It's from a Supreme Court case
Yeah.
way back in 1946.
Okay.
But it still applies. Basically, it boils down to this. Is there an investment of money in a common enterprise with the expectation of profits coming solely from the efforts of others?
Okay, so if someone invests in an ICO hoping the token value will go up based on, the work of the developers,
Right.
the SEC might say, hey, that token's a security.
Exactly. And then, boom, the whole project needs to follow securities regulations.
Wow.
Register with the SEC, tons of disclosures to investors.
That's intense.
Can be really tough for startups to handle.
Yeah, no kidding. So the SEC is definitely one to watch. What about the CFTC? What do they do?
The CFTC, the Commodity Futures Trading Commission,
Okay.
they see some cryptocurrencies as commodities,
Okay.
like gold or oil.
Interesting.
So they regulate futures contracts and derivatives tied to those cryptocurrencies.
Yeah.
It gets tricky because
Yeah.
the SEC might see an asset as a security, but the CFTC sees it as a commodity.
Right.
It's this jurisdictional gray area.
Yeah, how do businesses even know who to answer to?
It's a mess.
It's a real problem.
Definitely highlights the need for clearer guidelines.
Yeah, big time.
And then you throw FinCEN into the mix.
Oh, right.
Financial Crimes Enforcement Network. Another layer of complexity.
So while the SEC is focused on securities and the CFTC is looking at commodities, FinCEN's making sure crypto isn't being used for, illegal stuff?
Right. Money laundering, terrorist financing, that kind of thing.
Okay, so they're the AML KYC guys.
Exactly. They make sure crypto exchanges and wallet providers have those procedures in place.
Right.
It's a big compliance burden for businesses, but it's seen as essential for keeping the market clean.
It's a tough balance, right? Innovation versus protecting people and preventing crime.
Yeah.
So we have these agencies, each with their own focus. What about the laws themselves? Are there any laws specifically written for cryptocurrency? Or are we trying to make old laws fit this new technology?
That's the thing. We're trying to fit a square peg in a round hole.
Yeah.
Applying laws written way before crypto existed to this like super fast evolving tech.
And that's got to be causing some serious issues.
Oh, yeah. One big one is the Securities Act of 1933.
1933. Wow, that's old.
It's almost 100 years old.
So this ancient law is impacting a brand new industry.
It governs how securities are defined and traded. So, with the Howey test and all that, it can be a real problem for crypto startups.
Gotcha. What other legal hurdles are crypto companies facing?
Dodd-Frank, for sure. The Dodd-Frank Wall Street Reform and Consumer Protection Act, passed after the 2008 financial crisis.
Right.
It's all about transparency, preventing systemic risk, that kind of thing.
Mm-hmm. Makes sense.
It wasn't written with crypto in mind, but parts of it definitely influence how regulations are applied to crypto transactions, swaps, futures, that kind of thing.
Right. So keeping the system stable.
Yeah. And protecting consumers, too.
Which is important with how volatile crypto can be.
For sure. And then there's the Bank Secrecy Act, the BSA.
Oh, right. The BSA.
The cornerstone of anti-money laundering efforts in the U.S.
Yeah.
And it applies to crypto, too.
I see.
So crypto businesses have to report certain transactions, keep detailed records, help law enforcement go after criminals.
Right. So FinCEN's probably involved there, too.
Yeah, they're big on enforcing those AML and KYC rules we talked about.
Makes sense. So we have all these different laws that are being applied to crypto, but it feels like the classification of cryptocurrency itself is still like a huge question mark.
It's the core issue. Is it a security, a commodity, or something else entirely?
Right.
And the answer affects everything.
Yeah.
Regulations, taxation, the whole 9 yards.
Right. Let's unpack that a bit.
Yeah.
What's the difference between a security and a commodity, legally speaking?
Well, at its core, a security is like an investment contract.
Okay.
You buy stocks or bonds.
Right.
You're hoping to make a profit.
Yeah.
Commodities, they're raw materials. Think like gold or oil. You trade them based on their inherent value.
So if a cryptocurrency is a security, the SEC is in charge.
Right.
And if it's a commodity, the CFTC steps in.
Exactly. Huge implications for how it's treated in the market.
Yeah, and for how it's taxed.
Big time. Figuring out the classification can make or break a project. And the Howey test, that's what the SEC uses to decide.
So how does the Howey test actually work for cryptocurrency?
It all comes down to how the token is offered, how it's marketed. If people are buying it primarily as an investment, hoping to get rich off the developer's work,
Okay.
the SEC is going to lean towards calling it a security.
So it's not just the tech itself, it's the intention behind it.
Exactly. And that's why there's so much debate. It's not always clear-cut.
Speaking of gray areas, what about the difference between like utility tokens and security tokens?
Oh, that's another one where the lines can get blurry.
Yeah.
Utility tokens, they're meant to give you access to a product or service within a blockchain ecosystem.
Okay.
Like, think of it like a voucher for a future service.
Okay, and then security tokens are more like traditional investments.
Right, like stocks. They represent ownership, maybe come with voting rights or dividends.
So utility tokens for using, security tokens for holding.
That's the basic idea, but in reality, it's not always so simple.
Yeah, I can imagine.
It's a headache for regulators and developers.
To illustrate that, could you give me like a real-world example of each?
Sure. A classic example of a utility token is Filecoin.
Okay, Filecoin, yeah.
It incentivizes users to contribute storage space to this decentralized network.
Right.
Use the Filecoin token to pay for that storage.
So it has a clear use within the ecosystem.
Exactly. Now, a security token,
Yeah.
you could look at something like DAO Maker.
DAO Maker, okay.
It gives holders governance rights and potentially profits based on how the platform performs.
So that one sounds more like an investment.
Right. It's about ownership and potential financial returns.
That makes sense. And then there's stable coins, adding another layer of excitement to the mix.
Oh, yeah, stable coins. They try to bring stability to the crypto market.
Right.
They peg their value to something stable like the US dollar.
Yeah.
They could be super useful for everyday transactions, maybe even disrupt traditional finance.
But I know they've also caught the attention of regulators, right?
Oh, absolutely. Regulators are trying to figure out how to classify them, how to regulate them. They could challenge central banks,
Yeah.
It's really interesting to watch.
It sounds like we've only just scratched the surface here.
Yeah.
There's so much to understand about the legal side of crypto in the U.S.
It's a deep rabbit hole.
I'm especially interested in the practical implications for businesses. We've talked about the agencies, the laws, but what about licensing? What do businesses need to actually do to operate legally?
It can feel like a jungle out there.
Yeah, I'd say.
The U.S., it's got this patchwork approach to crypto regulation.
Okay.
Different states doing their own thing, Some states, like Wyoming, they're super crypto-friendly.
Right.
Others, like New York, they're known for being really strict.
Yeah, the New York Bit license, that's infamous in the crypto world.
It's expensive, it's demanding.
Yeah.
A lot of companies just avoid New York altogether.
Wow, so if you're operating in multiple states, it must be a nightmare to stay compliant.
It is. It's constantly changing. You have to be on your toes all the time.
And then there's federal regulations on top of that, right?
Yeah, even though there's no overall federal framework just for crypto, some things, like money transmission, might need a federal license.
Okay, so FinCEN's probably back in the picture here.
Exactly. They enforce those anti-money laundering rules, know your customer rules.
Right.
Businesses need to figure out if they need to register as money services businesses.
So you might need state licenses and federal licenses.
Yeah, it gets complicated.
And then there's the dreaded taxes. We talked about it before, but
Yeah.
how does that IRS classification of crypto as property actually impact people and businesses?
That's a big deal. We said before, it means capital gains and losses rules apply.
Right.
So anytime you sell, trade, even use crypto to buy something, you could have a taxable event.
Yikes. Must be tough to keep track of everything.
One of the biggest challenges is figuring out the fair market value.
Right, because crypto's so volatile.
Exactly. The price can change so fast. And if you're trading on multiple platforms, it's easy to get lost.
It sounds like you need really good accounting systems and a good understanding of the tax code.
Absolutely. And it's not just about staying legal. It's about potentially saving money on taxes.
Okay.
Using strategies like tax loss harvesting, picking the right accounting method.
It sounds like you need a good tax advisor who really gets crypto.
Couldn't agree more. Crypto taxes are complex. Best to get expert help.
Wise words. So we've covered a lot of ground, the agencies, the laws, the whole security versus commodity debate, licensing, taxes.
Yep.
What else do we need to consider about the legal side of crypto in the U.S.?
Well, consumer protection is huge.
Oh, yeah, consumer protection.
Crypto is becoming more mainstream.
Right.
So we need to make sure everyday users are protected
From
fraud, scams, unfair practices. We've all heard the stories about people losing their savings.
Unfortunately, yeah. What kind of consumer protections are being talked about or put in place?
People are pushing for stronger regulations to make sure consumers have good information, fair advertising.
Okay.
And if something goes wrong, they have some way to fight back.
Yeah, some recourse.
It's about leveling the playing field.
Yeah, protecting people from being taken advantage of.
Exactly. And then there's intellectual property.
Oh, right, intellectual property. How does that work in the blockchain world?
It's interesting. For one thing, you have the question of copyright for blockchain entries and code.
So who owns the code behind a cryptocurrency or a blockchain platform?
Right. And how do you enforce copyright in a decentralized system where everyone has a copy?
Yeah, that's a good point.
It's a challenge.
Traditional ideas about ownership might not apply here.
Right. And then there's the issue of patents. The USPTO, they have really strict standards.
For granting patents.
Yeah. And a lot of crypto inventions are struggling to meet them.
So it's unclear how to protect intellectual property in the crypto space.
It's a big question mark. Probably going to see a lot of legal battles about this in the next few years.
Yeah, I can see that.
But to really get a handle on crypto regulation, we need to look at some of the big legal cases that have already happened.
Oh, yeah, those SEC cases. Everyone's talking about them.
Right. Those are the ones shaping the landscape. Let's dive into those next.
Okay, I'm ready.
Let's do it. So those headline-grabbing SEC cases, right?
Yeah, the ones that have everyone on edge.
What are the big takeaways? What should crypto companies, investors, what should they be paying attention to?
Yeah, good question.
One thing's for sure, the SEC is serious about protecting investors. Fraud, scams, they're not messing around.
Right.
Projects making big promises, hiding information, that's a no-go.
Transparency seems key.
Absolutely. Got to be upfront about the risks. Investors need to know what they're getting into.
And it's not just avoiding scams, right? It's about how a project structures its offering.
Yeah.
The SEC seems pretty willing to call a token a security.
Oh, yeah?
Even if the project says it's a utility token.
You can't just say it's a utility token. You got to have the legal analysis to back it up.
So the Howey test is still the big decider, and the SEC is not afraid to use it.
Nope. These cases, they're setting the ground rules for the whole industry.
They're creating precedents that will impact the whole crypto world for years to come.
Exactly. And it's not just about avoiding the SEC's wrath. It's about building trust.
Right, with investors.
Yeah, and creating a more stable ecosystem.
Makes sense. A well-regulated market is good for everyone long term.
Absolutely. Now, we've also seen this surge in class action lawsuits against crypto projects.
Oh, yeah, those are popping up everywhere.
It's a sign the industry is maturing.
How so?
Well, these lawsuits are often brought by groups of investors who feel like they've been wronged.
Okay.
They're saying, hey, this project harmed me and I'm going to take legal action.
What are some of the common complaints in these lawsuits?
A lot of them are about fraud, misrepresentation, negligence.
Okay.
Like investors saying a project made false promises about its technology or didn't properly disclose the risks.
So investors feel misled.
Yeah, like they bought into the hype and then...
It all came crashing down.
Exactly. And these lawsuits, they can be devastating for crypto companies.
Financially, you mean?
Yeah, legal fees, settlements, it could be a lot to handle.
It's another reminder that crypto projects need to be transparent and honest from the get-go.
Oh, for sure. These lawsuits are a wake-up call for the whole industry.
Yeah, got to focus on protecting investors.
Absolutely. So we've covered a lot of ground here.
We have regulatory players, key laws, that security versus commodity puzzle, licensing, taxes, consumer protection, intellectual property, even some of the big legal cases that have shaped the industry.
It's a lot to take in.
It is. But what about the future? What's next for crypto regulation in the U.S.?
That's the million-dollar question.
Right.
It's always changing, so predicting the future is tough.
Yeah.
But if we look at the trends, I think we can safely say we're going to see more regulation, not less.
So the Wild West days of crypto are over.
They're fading fast. Policymakers are realizing crypto's here to stay.
Yeah.
And it has the potential to really change our financial system. And with any powerful new technology, you need rules.
Makes sense.
To protect people, keep the market stable.
So what kind of changes might we see in the future? What should people be prepared for?
We might see new laws written specifically for digital assets.
Okay, because right now we're using old laws that don't really fit.
Exactly. New legislation could make things a lot clearer.
That would be a big help, I think.
Oh, for sure. And we need to look at global regulations, too.
Oh, right, because crypto's global.
It's not just a U.S. thing. Different countries are doing different things. As the industry grows, we need more harmony to make cross-border transactions easier.
So the U.S. can't just ignore what's happening in the rest of the world.
Exactly. They need to work with other countries to align regulations.
That makes sense. What else?
I think the most important thing is ongoing dialogue.
Between
regulators and industry players. They need to talk to each other.
Yeah, work together.
Crypto companies need to be proactive, share their expertise.
And regulators need to listen.
Yeah, be open to feedback, adapt as the technology changes.
So it's about finding that balance, right?
Yeah, fostering innovation while protecting investors in the market.
Exactly. This has been so insightful. I feel like I have a much better grasp on this whole crypto regulation world now.
It's complicated stuff.
It is. And it's changing all the time. We're only getting a snapshot of where things are today.
Right. The crypto world never sits still.
Staying curious, staying informed is so important.
Absolutely. This space, it's always pushing boundaries, challenging the status quo.
That's what makes it so exciting.
Exactly. But it also means we need to be adaptable, keep learning.
Well said. Okay, I think it's time to wrap things up.
Sounds good.
Thank you so much for sharing your expertise with us. And to our listener, thanks for providing all these amazing documents.
It was my pleasure. And remember, everyone, this isn't the end of the journey.
Yeah, it's just the beginning.
There's a whole universe of knowledge out there about cryptocurrency. Stay curious, stay informed, keep diving deep. We've been talking about the SEC, the CFTC, the Howey test, security versus commodity, all that.
Yeah,
But looking ahead, I think there's one area that deserves a closer look.
Okay, what's that?
The impact of AI. Artificial intelligence.
AI and crypto regulation.
Yeah, think about it. AI could change how we approach regulation in this space.
That's interesting. I hadn't really considered that, but it makes sense.
All right.
Crypto generates so much data.
Tons of data.
AI is perfect for handling that.
Exactly. As AI and machine learning get more sophisticated, they open up all sorts of possibilities for regulators.
Like what? Give me an example.
Imagine AI automating compliance tasks or analyzing huge data sets to find hidden risks.
Okay, yeah.
Or even predicting future trends in the crypto market.
Wow, that's pretty amazing. AI can make regulation more efficient, more effective.
For sure. And maybe even help it keep up with how fast crypto changes.
Right, because that's the challenge, isn't it?
Yeah. Crypto moves so fast.
Regulation struggles to keep up.
AI could be the bridge between those two worlds.
I like that. It's like AI could help regulators keep pace with innovation while still making sure the market's fair and safe.
That's the goal, right?
It is.
It's an exciting area to watch.
Definitely. Well, this has been an incredible deep dive. I feel like I've learned so much about this complex world of crypto regulation.
Me too.
And I'm sure our listener has as well.
It's a fascinating topic, that's for sure.
Uh,
And it's constantly evolving, so staying informed is key.
yeah, we just got a snapshot of where things are today, but tomorrow, who knows?
Exactly. That's what makes this space so exciting, but also challenging. Got to stay curious, keep learning.
Couldn't agree more. Well, I think that's a wrap for our deep dive. Huge thanks to you for sharing your insights.
Happy to do it.
And to our listener, thank you for sending over those thought-provoking documents.
The pleasure was all mine. And remember, everyone, keep exploring. The crypto world is full of fascinating discoveries. Stay curious, stay informed, and keep diving deep.